There's going to be a lot of fighting because there's a lot of money at stake, right? And if you have that much money at stake, no one's going to go easily, and there's going to be lots of lobbying and lots of positioning. But ultimately, the market will decide.
Hey guys, welcome back to the channel. Today we have Michael Saylor discussing the current Bitcoin market. This comes at a time when the crypto market is emulating the downturn in the stock market, which is expected. Fear in the market is to be anticipated, especially following the Federal Reserve's last increase and the uncertainties around growing expenses. Despite the Fear and Greed Index indicating instability across the board, MicroStrategy CEO Michael Saylor remains bullish on Bitcoin. Yesterday peaked at 19,187 and dipped below 18,900. As of the recording of this video, Bitcoin is currently sitting just above $19,000. Saylor is the least surprised by this, but it does show that inflation is still an issue. According to him, central banks would not be able to curb inflation because it is driven by excess money printing. Let's get right into the interview with Michael Saylor, who will give us his take on the current state of the Bitcoin market. If you enjoy the content we do here, be sure to hit that like button and subscribe to the channel. Let's get right into the video.
They start out with a good idea, and then they run out of money. And so then they go look around for someone to give them money. And so I think like 40 or 50 years ago, someone gave money to a Greenpeace type organization to lobby against nuclear power. And probably it was the oil and gas industry that gave a lot of money to these charities to lobby against nuclear power, to shut down the nuclear power industry. And then ironically, another 30 or 40 years, the solar and the wind lobby gives money to them to lobby against the oil and gas industry. And then when they run out of that, other crypto promoters are giving money to these environmental lobbyists. They're just giving them huge amounts of money to lobby against Bitcoin. If you're an environmentalist, you would be focused upon saving the trees or saving the seals or doing something in order to cultivate parks and the like. But 99.92% of all the carbon comes from something other than energy that fuels proof of work. So I actually think it's the other crypto promoters that are generating all of the attack points. They're generating all the propaganda. They're feeding it. They're funneling it through academics. They're funneling it through politicians. They're funneling it through 501c3s and through environmental activists. And so you have to just follow the money. And they're funneling it through their lobbyists. And I think their agenda is they're all promoting unregistered securities. So all of these other cryptos are, for the most part, unregistered securities. And so you have to have a justification for promoting a crypto token that doesn't use energy. If you understood securities law and if you thought about physics, you would realize that when you slurp the energy out of the commodity, it becomes a security.
Saylor goes on to say that big banks are currently unable to issue stablecoins because they're unregistered securities, which puts a twist in the industry, but once licensed, will create a giant on-ramp in market capital. It would allow for tens of millions of transactions per day, which would provide massive potential for the crypto and stock markets. However, with the Fed currently raising interest rates, this will put a strain on markets across the board.
I think that there are some crypto organizations that are lobbying both sides of the fence. The market is going to become more and more educated, and as the market gets more educated, it's going to see the virtues of Bitcoin as the dominant digital commodity, and Bitcoin's going to get stronger. I think that that regulators, as they focus on this, when you focus on it and you bring a lot of attention to bear, I think they're going to realize that they need to segment the market into digital currencies, digital securities, digital commodities, and they're going to set precedents by their rulings where it's going to become more clear. It's already becoming clear to institutional investors. And you can see, for example, you're reading about the comments of the chair of the SEC in the Wall Street Journal on the front page, and you're reading about it in Bloomberg. If you roll the clock back 2 years, I don't think Bloomberg and the Wall Street Journal really understood the difference between 10,000 crypto tokens. But I think today it's becoming critical for multi-billion-dollar investors and big banks and big regulators and politicians to understand the difference between US dollar stablecoin and crypto property in the form of a Bitcoin and a crypto token that's a security. There will be a lot of sound and fury for the next couple of years while we sort it out. But I have confidence that the world will eventually sort it out because there are physics involved here. If you think about it, first people need to understand why Bitcoin is a superior crypto asset to every other crypto asset for a long-term store of value or for sovereignty. That was the first thing MicroStrategy went through. The second thing they need to understand is, why is Bitcoin superior to gold as a bearer instrument or a commodity or precious metal store of asset value? And so that's going to be the second stage. And the third stage is, why is Bitcoin as crypto property superior to other forms of property? Crypto world has about $1 trillion worth of money floating around, and we're trying to sort out which is the superior crypto asset, right? And for what? And the truth is, I really believe the killer application is a Lightning wallet on 8 billion smartphones that has US dollars as a short-term medium exchange and payment network and BTC as a store of value. And it runs on Lightning, and then it is secured by the underlying Bitcoin base layer. That is going to be the voice over IP moment, or the Netscape moment, when you actually have the ability to download a Lightning wallet in 30 seconds and trade US dollars with all 8 billion people on the planet friction-free. When that happens, that'll go viral, and hundreds of millions of people will first grab that in the first year, and then billions of people will grab that. Technology is going to play a role here in spreading things, if you look at that. But from the investor point of view, there's $1 trillion that's being argued over in the crypto world. There's $10 trillion in the precious metals world of gold. There's more than $100 trillion of property. And then, of course, ultimately, there's $500 trillion of other assets. And so what we're going to go through is just a very intense education process. And there's going to be a lot of fighting because there's a lot of money at stake.
Saylor says that one of the ways they tackle inflation is to raise interest rates, but that the actual inflation rate that they won't tell you is 2 to 3 times the reported number. There are a number of factors in addition to the money printing that's causing the spike to happen and why currencies are collapsing in value. One of the strategies Saylor suggests is, if you're in an inflationary environment, to convert weak property into strong property. But it's not as easy as moving out of the country. Those countries could just as well devalue that currency and you'll take a significant loss. That's why Saylor says that Bitcoin is the greatest asset in human history because of the value it holds. His long-held belief is that Bitcoin is a better investment than fiat currency, and his company MicroStrategy has made Bitcoin its primary asset in its treasury reserve position. We'll definitely be keeping an eye on this. Comment down below on what you think of Michael Saylor's Bitcoin position. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.